Hello, welcome to everyone here on this unconventional forex trading channel. As usual, I try to put some information together for the curiosity and the interest of those who are following my channel and following my approach to forex. Since my last video, I got surprisingly even more questions, basically from majority of people that were kind of beginners, but also some people that has experience. And curiously, a lot of the questions were regarding also my Excel approach, not only the UFO, and I'm happy about this. I can give and release some information. Of course, some formulas are proprietary. I would never trade them, at least, or even for 7 billions of dollars for one day, and that's it. So I can give them. But there's a lot of things, a lot of concepts that can be said that may help you, and especially those of you who are demonstrated interest using in their analysis Excel spreadsheets in order to have an outlook on the markets. So today we will do a kind of little recap of the video that I strongly suggest you to watch and give it a look. My previous webinar. Today I tried to organize the things and kind of giving more precision to my concepts, despite the fact that you are using or not any kind of tools like expert advisors or external tools like spreadsheets or other assets of other markets in order to have an idea of what is doing dollar, euro and all the other currencies. So this video is for anyone that even approaches for the first time on this channel, but I strongly suggest, of course, to watch at least some previous webinars on which I'm talking and explaining better certain things, and also some videos that are tutorial for those who are having the expert advisor that I've built, which are anyway something that people that doesn't have that kind of expert advisor anyway has the proof that markets, especially forex, can be somehow designed or shaped by using math, because we are dealing with numbers, therefore we use the language of the numbers, which is math. And here I start this webinar on which now I'm telling you what I'm going to talk about. I of course always try to be as strict as possible in my exposition, but sometimes for those who are interested doesn't have to matter that much, because it's important to deliver a concept and it takes the time that it takes. So I know that some of you can get bored of some expositions, but I like to think to what I'm saying instead of reading from a paper, because otherwise I can send you the PDF. But I'm not like that. Of course, I'm helping myself with a bit of titles so that can be also good for you to understand what we're going to talk about in this webinar. And everything has a meaning altogether from the cradle to the grave of this exposition. Okay, so this is what we're going to talk about. I gathered all the requests, informations, and I said, okay, it's good to, if I have to talk about something, let's say decide the point 4, of course I have to start from the beginning, especially because I want to do this for the beginners. So the ones that I have approached recently in Forex markets and in trading activity, and in order to help them not to take the wrong road, which is the majority of what you actually see in the web, accumulated years after year. So there are also very old videos with very old approach, and my approach, as you may know by following my videos, my previous webinars, is based on math. Okay, all goes to that core. That's the core of the analysis. And in regards to the expert advisors, I would like to spend some moments to say something at the proper time. So basically we will talk about currency analysis from the chart screen. This is a workflow. Okay, I should have wrote it probably instead of webinar topics, but it's fine. It's a workflow that when we do go on our trading platform and we want to decide what currency pairs we have to trade, we have to analyze, process what we have analyzed, and consequentially make a decision and enter some trades. Okay, so this process from the cradle to the grave will be regarded a brief recap of something that you have already seen very extensively in my previous video, that regards the currency analysis from the screening of the charts. Okay, so we screen 28 crosses charts, and this is the basic tool. We take the chart as a tool to indicate us what currency is strong, what currency is weak. That's it. There can be extra tools like Expert Advisor or processing spreadsheets like Excel. I have to mention in this point, then I will show you of course also charts and whatever. Okay, and let me just do all the things, but I will speak a bit also on the spreadsheet, because a lot of emails were talking about, tell me more about your spreadsheet and how you organize data information, what are your formulas, things like that. Okay, so that will be something that will go at the end as a conclusion and explanation, but will be used along these main points, more or less. It depends on the moment. Then of course, after selecting the pairs, we then have to have a definition. After analyzing the pairs, we have to have anyway a definition simultaneously, point 1 and 2 are together, of setting up a temporal window for the analysis. And then the process of the result of the analysis will be our output for then understand what are the currency pairs that we have to build for our trade, the output application. Okay, once we have decided the chart, the pairs that we want to trade, before trading them, so placing our positions, we have to analyze them a while. So among all the 28, we have selected 4 pairs, for example, and then we analyze them. And we decide when is the best moment or the price zone where we consider right to place our orders. Then we need some kind of exit strategy in order to take the profit, or to have a stop loss of our operation if they might be wrong. Then of course here there is my picture above, so you cannot read everything, but that will be the title. We will of course make some mathematical consideration and assumptions, so approaching Forex using math, and I will explain briefly concept that may help you to organize your spreadsheets, because it's very important to understand. And now let's start, and let's start from this, that when I built UFO Expert Advisor, I built it with the meaning of creating a sort of embedded spreadsheet style calculation into an expert advisor, because at the end I was requiring for my analysis a quantitative evaluation of every currency from the computation of 28 currencies. That would have led my at first sight analysis to understand on what currencies I should have put my attention in different time frames. That is the expert advisor. But in order to build it, I was in need to have a territory where to test my analysis, also with graphs, whatever. So that is a spreadsheet program. And normally your MetaTrader should not have indicators or fancy things, but should have something that works like a spreadsheet. So the options are having an expert advisor like that, or using a spreadsheet on which, on the other hand, even if you don't have the practical application of having all in your trading platform, you have an extreme powerful gear for translating what you see in the markets in terms of math. And that can be, on the other hand, very powerful. And I will show you in a minute what I'm talking about. So, a brief recap of this point so that you can follow me through this webinar. But at the same time, if you want to have more information or another example, in the previous video I made, there is this in real. Basically, what we do, remember, oh, this is the other one, okay. We have 7 charts for each currency, and so this is what you have to search also in the previous video. And we do have this kind of analysis. So we have the 28 currency pairs, okay? We know that we have 8 currencies, and these currencies are Euro, USD, CAD. Even if I explained that this thing, there were a lot of emails that were not understanding, and it's a very simple concept. So now I'm gonna explain you in a different way. Let's see that now it matches, and you also understand the previous one, which is the straight one. Okay, so Swiss franc, GBP, Aussie, Kiwi, and yen. if I want to analyze them and say if they are strong or weak. So this, you can take this also as a kind of, in your journal, you take what it's important that you do every day. Okay, so let's say you want to analyze euro and determine if it's strong or weak, and then maybe other extra consideration if is stronger or weaker, or the strongest or the weakest. What I'm saying is now the same thing that the UFO does, for those who are hanging on that concept. Okay, so this is the same concept. And when you measure something, you measure it. So all this process can have a mathematical representation that can be done with an expert advisor or with a spreadsheet. Okay, but it can also be done like I'm doing now, so in a very primitive way, but the same way is effective. Even because if you think, not that much of you are doing the analysis this way. And even if you do it this way for a specific currency, then what is the output of this analysis? You don't process it, you don't go further, you then stay strict to currency pairs charts rather than currency charts. You don't get you don't split the concept of currency and currency pair. So we want to analyze a currency, euro, we analyze euro, euro, USD, euro, CAD, Swiss franc, GBP, Aussie, Zealand dollar, and Japanese yen. So we analyze this 7 this has to be done maybe, exactly 1, 2, 3, 4, 5, 6, and they are 8, of course, because I made this double. This doesn't count, sorry, huh? Okay. And this too. 4, 5, 6, and 7. So we have 7. Every time we want to analyze a currency, euro, we have to analyze 7 charts. Same thing with the using the crosses that our broker provides us. Okay. And same thing, we do this for USD, for CAD, for Swiss franc. We will always have 7 charts at a time. And then we have this process, currency analysis from the charts, screening. We screen these charts, and remember what we had. Let's do this way. If we have euro USD, that it's going up, and euro CAD is going up, and euro Swiss franc is stable, and euro GBP is stable, and euro Aussie is up and is stable. This is one of the possible scenarios. There are many possible scenarios. We can determine that euro is strong 4 on 7, which is a proportion. Okay. This is the raw way the naked way to approach. But we can also analyze this because these are fractions. Every euro USD is a fraction 1 over something. Euro CAD is 1 over something else. They in total have 1, right? And the output can be described by using formulas, because if this is up, means in terms of a specific formula that I create in order to evaluate the movement, which is from point A to point B, and this movement is below, for example, 0, which I fix in this axis. And then if this is the movement, this would be a number. Okay, when I deal with numbers, if this is strong, would be a positive number. This would be another number, let's say this way, 24. And this will be, I don't know, almost nothing. So anyway, I will have numbers that will describe a condition of being positive or negative. This is why, this is the math. Okay, and I have 4 and 7, for example, for the euro. So we say is strong 4 on 7. Would be weak. It could have been weak 3 on 7, but it's not weak, it's flat, and so on. So we can have other charts with different, but we have anyway numbers, and with numbers we can deal. So once we have decided this and translated that the most strong can be GBP, and the second most strong can be yen, and the weak can be dollar and Aussie. This is our output. So we understand that we have the strong GBP and yen, and as a weak we have USD and Aussie. Therefore, this is our analysis that we do from the 28 charts in clusters of 7 by using, the common group that they form together for each currency. So I hope this is clear. Okay, well, secondary, and very close to this, now I'm gonna delete this, very close to this concept is that when we do our analysis on the charts, and we have a chart that is going this way for the euro USD, and any other chart that we might have. Okay, let's do this, for example. Very important is that we have to decide the time zone that will contain our forex market analysis of the point 1. Therefore, if I use this time frame, this more than a time frame is time zone, this time zone, for my analysis on this chart, euro dollar, and here I have a euro CAD, euro Swiss franc, euro GBP, euro Aussie, and euro New Zealand dollar, and euro yen. I need to apply the same moment in time to each one of them. So if here it's 6 o'clock and here is 9 o'clock, it has to be for all the same, because we are measuring the market performance by determining then the strong and the weak. So they have to operate within the same time range. Okay, this is fundamental. And if you help yourself in the trading platform by using your time markers, that would be more easy to identify what you are analyzing. And you can do this also in a multiple time frame vision, so analyzing the day and maybe the 4 hours for the hour. Okay, so this is another very important point that you'd have to do every time. And then in a spreadsheet is taken in consideration by the data that you're assuming, and works anyway, taking the same period of time. Okay, next step. Certain steps I would go more and other less. Okay, this process we partially saw in the point 1. Once we have the 8 currency pairs, we analyze the strong and the weak. And we have at least, if we want to make it very simple, then of course you can do even the third and whatever, but that comes a territory very hard to define, because in what I show every time I do a video with Excel, I show you that the Forex is very complicated, waving, and there can be only certain moments where it's better to act on a currency and other moments where it's good to act with another currency. So at the moment of the analysis in our time zone, this is the market situation that we want to get out of our analysis. Market scenario. So 28 charts of currency pairs are leading me to a first and a second strong, a first and a second weak. And this is it. This is the output of my analysis. I need to have an input, the chart, an analysis, and an output. I'm not finished, because this output, it's very important for me to take decisions and to create the cross A on B, A on C, D on B, and D on C, assuming that A is always base and D is always base in the crosses. So we can have some crosses that are as base or as quote. So GBP, for example, is the quote of the euro, but is quoted in dollars. So in this case is base. Okay, so we have euro, GBP, and we have GBP, USD. Here, GBP is quote of euro. Here, GBP is base, the base that is quoted, not in GBP, but in dollars. So, the moment you have this output, then you combine it accordingly to the currencies that are given by your broker. Okay, so this is a simplification, but gives the idea that now you have these elements. These are the elements of our trade. Okay, fine. Okay. Next step, we have to build our trade equation. So if we had, of course, cross A, cross B, and this I will define in a moment. Cross A, cross B, cross C, cross D. This will be a kind of equation that would be A plus B plus C plus D. Okay. So we follow then our equation. This equation will become our portfolio. Let's see this just to, because I also wanted to speak about Excel, and you're waiting for that. Let's start. First of all, arrived at this point, what you see in Excel is just simply what I explained in the previous points, starting from data that are taken from the markets in real time. As usual, today is Sunday, is the 2nd of February 2019, and these are data from the 1st of February 2019, is a Friday. What you see here is the mathematical / graphical representation of what I have explained in the previous point. Okay, so for me is the oversimplification work that instead of doing that daily in that way that can be done, I decided to translate in formulas what I was counting every day, because I was counting anyway. I was making some kind of computations, even with my brain. I can surely say that if you pour me a cup of coffee, and I can say that the limit that you can pour this cup is this limit, okay? So visually, if I pour coffee, when the coffee arrives at this level, I say stop. This level can be anyway measured. So I can tell you, stop at the moment that this arrives to this level, the coffee arrives to this level. And we are effective because we want that, or at least we can say 1 centimeter before the coffee arrived to that level. But we can also, if we have the centimeter of this, and we say, pour me 14, no, it's not 14, it's 13 centimeters of coffee. We'll give another representation of the same thing. So no matter if I do it naked way on charts, but we can have more accuracy, or we can have more effectiveness, or we can have that we are sure that if we say pour only 5 centimeters, we can have a short coffee, and because we are determining specific levels in an undoubted way. So this stuff that you see here is the result of formulas that are my way to describe the Forex, and starting from the very first concepts of the points before, and I have assumed that by the mails I've received that there are many of you that also have a different approach on that. Because the beauty of math is that you can describe things in many different ways by using also functions or concepts like Pythagorean math and square root of 2, logarithms, and there are plenty of stuff that you can use. You need to start from raw data. That's the point. And I had created also an expert advisor for this. So for taking the data of the price, high, low, open, close, into a spreadsheet with a kind of process that updates the charts every time you want. You can do it every 5 minutes or every hour, depends, and makes all the computations that represent the assumptions that I've explained before. So why I'm using this at this moment? Remember, the point is decide the pairs to be traded according to the analysis of the output. Okay, and in order to, these steps are together, okay, because we have a chart analysis of the selected pairs of the point 4 to determine overvalued and undervalued zones on where to place our trade positions. Okay, so it's the sell high, buy low that we mean. Okay, so for doing these 2 points, which are the application of my output and the translations in terms of trade, so price levels, go into our spreadsheet. Remember, we talk right to left, okay, and at this moment let's pretend that we are analyzing the markets on a moment where there was some movement anyway. So when we register some movement, let's say that the first movement is here. Oh, one thing is very important. Some of you were asking about the fact why there are always different charts, especially in Excel. Why you not stay strict to a specific one? The fact is that the more you are investigating on things, the more some math reveals other possible information. And I'm getting that together. So it's a dynamic process. It's not a point that you arrive. And it's just a way to refine and also to will to represent what are the effective moments that can reveal us, for example, when to enter the market. So this is why they are continuing evolving. But basically, this graph that you see here is an enhanced graphication that you also see in my previous video that was more flat, because here we have some kind of the oscillation of, so the wave activity, for example, of the euro, and these peaks is a normalization on 100% of the same graph, so that I can see more clearly if there is an overvalued situation or an undervalued situation, right? Okay, and this for every currency. And this is the market performance. So this is the 8 currencies moving together. There's a difference between the last graphication in the sense that I have almost close to determine the points on which is better to enter a trade without watching the charts that I have selected. So without making, or just making it for, you know, for extra analysis, but just to have an indication, I can already have this as a point of referral. So let's make an example. This is the whole day of Friday. This is the end of Friday here. And so this is the end of the markets of the last week, Friday. And this is the beginning, 24 hours. Okay. So let's say that we move and we are in this area. What we see in this area at this moment, we see that this green bar and also this CAD, this gray bar, so we have Aussie and CAD, which are in an area of undervalued, but comparing to in the Forex 8 currencies, it could be that, and in fact here in this case there is a kind of trend downwards for as regard the Aussie. On the opposite side, we have these choices at this moment. So we have yen, we have dollar, the red one. Also, we have euro. Okay, but let's say that the most significant ones are Aussie, CAD, and yen, because the others are into the middle, and we want to avoid these situations. These currencies in the middle will come out after, for example, CAD, that even if it's good because it is at the bottom line of this bouncing line, see that it's naturally expressed here. It's like the second choice we want, and see that, for example, euro, that is this blue, it's coming out at this moment in times. Okay, so, and then the CAD comes out later. So we have to catch the moment they are at the right point for being sold or bought, and accordingly also to this oscillation. Because when we are here, okay, in this area, at the hour 19 hours ago, 20 hours ago, so let's put this as well, 20 hours ago. We see here, pardon, but you don't have this, let me briefly. Okay, so 20 hours ago, this is the Japanese yen. 20 hours ago, the oscillation was like this. Japanese yen was in an overvalued condition. So accordingly, because I'm showing this because there is my video here, of course, so accordingly to this graph there is coherence, so it's in a zone where it can be sold, and this is this peak here. Okay, on the other side, if we take this first choice, Aussie, we see that at this moment Aussie is still trending down. It's not good to buy Aussie at this moment. In fact, in the Aussie wave activity, there is an overvalued situation of the fair price of the Aussie, because these are fair values. So they are also selling at this moment Aussie. It's not good. We see that Aussie is good when it goes here in undervalued situation to go long. And in fact, in this area, which is this area, it started to go up. Okay, let's see CAD, for example. CAD 19 hours ago was not even that one good. So at this moment, the assumption is I don't want to enter a trade. Maybe I can do it with other tools, but I see that maybe the euro could have been the only one, because there was a kind of activity down that should have gone up. Okay, so maybe we can give a chance on that, but this is not a good time to enter, so you wait. This is an example where we have currencies this way, but they are not balanced. Let's go on another point then. We wait some time, the day starts to develop, and it goes here at 14 hours ago in time from the end of the Friday session. So we are going here at 14. Okay. We see Aussie 14 hours ago, and the waving is in an undervalued situation, so they can buy this. And so we have a buy here, and also let's see here, wow, here we have a GBP in sell. See, GBP is the pink one and it's in sell, and here as well. So we have a kind of agreement of this. So we write down that, okay, I'm not doing for all the charts one too strong. I will make you something that it's really on what is the day activity. So a practical example, because we can have more currencies settled up for be traded or just a few, and Friday, you know, is a particular day. So anyway, we had 14 hours ago, we had GBP Aussie in sell. Okay. Then let's just clear this off. Okay. Then we had another moment. Let's go further. That we had this. Now GBP is in a down situation, okay, and Euro is in a up situation. This is blue is Euro, this is below is GBP. We wait, and also we know we have to wait because 11 hours ago there was this condition, okay, but Euro was not ready to be sold. There was an up. There should have been an up. So in this condition I sell Euro, which is accordingly to this to be sold. And here, at this moment, we're still in this portion of the area, so in a sell condition, and we would like to buy this. So maybe the right moment that develops through the time is when we start to see activity like this, when we notice that that we notice that Euro here is ready to be sold, and GBP is ready to be bought. Okay. And if we can notice, we can also notice, for example, on a different way to approach the analysis, that at this moment also dollar has a buy pulse. And look at this. This is the red dollar. Okay, this is the selling for buying. Okay, so as you may notice, I'm not watching any chart at this moment, because this is the mathematical graphical representation of 28 charts in just one place. Also, I have these numbers above, but for another time, it's just indicators that I use, that I built. Okay, so we can also assume that other currencies, we don't take them in consideration because it's dangerous to play in this area. There's only one point that we have to remember, that anyway they also have sold something that we didn't took in consideration because there was not a good pairing of charts. Okay, so this was the Friday. So let's assume that at the hour of 6, let's say 8 hours ago, we had the opportunity to buy GBP and sell Euro. Okay, so eight hours ago. Notice that here we buy GBP Aussie, so here GBP is sorry, here we sell GBP Aussie, so here GBP is weak and Aussie is strong. 14 hours ago, 8 hours ago, the weak is the Euro and the strong is GBP. And this is a perfect example that no matter what, this trade, the moment I have a confirmation that something is ready to go on the opposite side and stays in this formula, I close this trade because GBP is no longer weak, now it's strong. That gives me a sell in Euro GBP. Okay, so this is a kind of natural take profit moment. Okay, that we'll see later. Okay, so let's go briefly now to the chart. And let's focus on two charts only. So we have, let's do it first on a euro dollar this way. We have 2 moments in time. One is 14 hours ago and the other one is 8 hours ago. Okay, so 14 hours ago. $14 hours ago, 13, 14, okay. So this is 14 hours ago, the other one is 8 hours ago. Eight hours ago, it's here. 9 o'clock and 3 o'clock p.m. Okay, so the first one is GBP Aussie. We have a sell of GBP Aussie 14 hours ago. Okay, this is 14 hours ago, GBP Aussie sell, and that event was here. So here we have 112 pips. Okay, and you can check on your charts. This is a fall that was somehow relevant in the graphs with this timing. Then look at this point, which is the point where I should trigger Euro GBP in sell. Look at the GBP Aussie that bounces up. So clearly the movement that this is my take profit line. It's when I said that I have to exclude and close take profit on this trade because GBP became strong or weak, from weak to strong. Okay. Then we have to enter at this point Euro GBP in sell. So let's go to Euro GBP. And at this point, without not that much knowing, remember the waves and the charts, you have 30 pips is the end of the day, of course, but that was the other signal. Okay, and paradoxically, we could have also somehow taken the Euro GBP in buy at this moment, because look at here, GBP that was really weak, and is this the same analysis that I also explained in the previous videos? Look at what jump was up. Okay, 58. So they made the 100 pips by a move up and then a move down. But basically I was correct also in this analysis, taking only 2 trades, and in this case closing one with the next element that was saying me, hey, here GBP was sold, here GBP was bought, and sold as bought. And this can also reveal interesting stuff about the fact that we don't get busy with other currencies that are not performing well, and we don't take in consideration all the rest. So it's a very filtering process that can be done by having an external spread. This is my news, this is my fundamental analysis, this is my technical analysis. Everything goes in this box. And of course I use the UFO on chart for having, you know, a visual impact as well, or when I'm out and I'm using maybe my laptop. But this is the conceptual moment where everything comes ordered in formulas with a meaning, and I hope this has a meaning for you as well. Okay. So we saw these 2 simple examples. In this case, for you traditionally, if you go and have an analysis where you don't have not even the spreadsheet for doing that, okay, let's say that anyway you have the analysis that GBP Aussie should have been bought, or that Euro GBP should have been, GBP Aussie should have been sold, or also at a certain point Euro GBP should have been sold. What you do, if you take a graph like this and you evaluate, because maybe you are at this moment of the day that Euro GBP, Euro is strong and GBP is weak here, okay, and you wait for that move, and you know that by the analysis of the 7 charts, Euro is really strong in this moment and GBP is really weak in this moment, and you realize this in this time zone. This is your time zone of analysis, okay, let's say this, and you determine by analyzing Euro and GBP with 7 charts that Euro is strong and GBP is weak. So when you're here, you don't open the trade here. You think maybe this is the whole move that it has been done for Euro GBP. I will, anyways, is an up. I will buy it only if there is some kind of discount, better price for that. So you wait for a moment that could be here, that could have been here. You wait when the move is in the other direction. Maybe you can have some drawdown, like 5 pips, 10 pips. But the important thing is that you are buying accordingly to something that you already decided will go up, at least will have a move up. So if you know this with, let's say, a probability of on over 6 on 7 charts, or even 7 on 7, so 100%, and this is, I don't know, maybe 78, I don't know, whatever, let's say 70 something percent. You know for sure that you're going to buy. There's no more problem about the fact that you want to evaluate the sell the moment you see the price going down. You expect a move down, and here you start buying. Because if you buy here, you can have a great move like this, but you can also have a kind of process that doesn't go immediately. But if you are taking a moment where the price is undervalued, that's better. That's a part of the money management as well. This process must be done once you are sure about this, anyway. So you have to have a proper analysis. Okay. And of course you cannot determine when this stuff will happen. You have to take and observe, but at least you know that you are observing Euro GBP. So you know what currency to focus, or GBP Aussie. Okay, or Euro GBP here for selling Euro and buying GBP, or here in the opposite direction. But anyway, you have identified, anyway, this is another important assumption that you do, that when you understand that this is the currency you're going to buy here, and this is the currency you want to sell here, you can also assume that you can trade buying GBP and maybe selling New Zealand dollar, because you know for sure that this is going to be a buy. And then you know that other currencies may have oscillation, but they are sustained by the fact that you have a buy. So you can also sell yen, GBP yen, okay? Maybe Swiss franc, but I don't consider that much. And same thing for euro. So if you sell euro, you're gonna buy dollar and nothing else, or maybe CAD. Okay, other than GBP. So this is the process for trading Forex, not having a chart, putting indicators on, supposing the highs and the lows, support, resistance. These are support. See, this is a support resistance. This is a support resistance. This is a support resistance of the currencies. And there's nothing more to do, okay, at this point, or doing the analysis on chart that I have explained before. So I also spoke somehow, without having the title, of the exit strategy. The example of this is my exit strategy. At the moment I see that GBP from weak becomes strong, this is my exit strategy of all the currency pairs that have GBP in them. So I close GBP Aussie because GBP is no longer weak. It's a very simple, and of course in the money management previews webinar I explained the ranges for the stop loss on equity rather than price levels, all this stuff. You go and watch that previews webinar. I try to focus on the things that people were more curious about, and I'm almost finished, but it's very important to arrive at the end. And now we finally have also understood this kind of fact that you have to analyze more times in the day, this stuff. Finally, last point, and then we're finished. And I thank you for your patience in following this webinar. Okay, let's clear this. Okay, so for those who are fans of this stuff, I have too much spreadsheets and formulas and I will never reveal them. I can reveal you the process. I already revealed you, and I hope I inspired you to take in the same, if you don't have the expert advisor, but you can always have your Excel file and work on the numbers of the currency pairs. Okay, and arrive to a consideration on the currencies. And I'm not a genius in math. I think that there are many more geniuses and smart people that they are math scientists. So it's nothing very special. It's just that you have to apply and test. And for doing this, you need something that is this workflow. You need a source of data. Can be investing.com, can be whatever you want, that you take the high, low, open, close, or maybe just the open and the close, or if you want, you can want to work only on the close. Okay. When you have this source of data, in my case is an AA that grabs the data from the MT4 and gives an output in files that through a batch process in my computer goes to my spreadsheet. Okay, so we'll have euro dollar, euro USD, euro CAD, euro Swiss franc, and so on. Then I have GBP, Aussie, Swiss franc, all the crosses for each of these values, or for more clauses, because then you need to have that. Okay, so this is a sequence from the present moment till the moment backwards that you want to maybe analyze, I don't know, 1440 bars, which is the day, in minutes, or you want to analyze 24 bars in hours. So this is very simple. From these files, there is the processing. So other spreadsheets that have formulas from 28 groups, 28 of grouped values. Here, the formula brings them together in clusters of 1 to 7, like I show you for each currency. So this is a currency, this is a currency, this is a currency, and here we have as a result 8 values, which are currencies, which are the lines that you were watching, you know, above and below, with a zero, with an oscillation. this is what I do analyze, and this is my setup, my gear. So there is a part very important, how to extract the data. Then there is a part how to semi-automate the process in order to be very easy to do that. Then how do I gather the data together in a spreadsheet? And then what kind of formulas I can use to describe the process of analysis that I have explained in the previous points. No matter what is the kind of math that you want to apply to your analysis, it has to go to this kind of blueprint. Okay, so this is the blueprint that I am giving you, because without this you cannot be effective and efficient. If you have to waste a lot of time importing all the time the data, it's very annoying and time consuming as well. So you have to gather all together this information coherently and to arrive to a simple output, which is this. It seems very complex, but it's very simple at the end. Don't you agree with me? Okay, so the formulas then that you want to add, I'm just giving one for all, because it's very important that you understand that you have to parameterize yourself. So if you have a movement of one of those 28 values, you have 28 values, and you have one movement, let's say from the analysis of the single 1 euro USD, that is going to go in the cluster of the 7 charts that you are using for analyzing euro. And you have the price that since the beginning of the day or the week or the previous hour till now has moved from this close to this close. You have here a delta that you can express in percentage, right? So you have this close A and this close B, and you can make, for example, one of the calculation is B above, B above A plus B, let's say, for example. So you have a ratio that you can express in percentage. And if you can express in percentage something that goes in a chart, then you can say that, for example, the Euro USD has plus 2% of a movement that you define in a specific time frame and time zone. And then you have Euro CAD with minus 0.5, then you have Euro Swissy with plus 1, and so on. And these are anyway at the end something that if it's positive is up and if it's negative is down. Or if it's positive is strong and if it's negative is weak. Or if it's positive is overvalued, or if it's negative is undervalued. Depends on what you are analyzing and the complexity of the formula that you are applying according to your math knowledge. Okay. So, hoping that this is clear and that I made some extra light, and again, this is about 1 hour and a quarter long video, so I previously thank you all for your patience along this road, this webinar, and I simply wish you good space and time, and I don't take any longer your time. Please consider also the previous videos I made as an addendum of what I have explained now. Okay, good space and time, enjoy the weekend and enjoy the trading activity you're doing, and I hope to be inspired by this. Thanks for watching and subscribing and supporting the project, and if you like, put a like or a comment. It would always be appreciated and can be helpful also for the others.